Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. Before we get going, give us a follow. Check us out on Twitter at Tusk Media LLC. Very prompt because we are talking about Twitter right now. I'm Andrew Hall. Garrett Palmer joining me, the intern. How's it going?
Good, man. Real good.
We
had to get the young guy out here.
Had to get the young guy.
Ben had a birthday yesterday. He's an old man. 27.
Ben's getting old.
26.
Something like that.
Yeah.
Something like that. Who knows?
40,
He's timeless. Late 20s. Late 20s is what I heard. I don't know if he's buying that saying, but I think he's in his late 20s now. But yeah, I had to get a young guy out here, see what's hot in the streets.
He doesn't have the stamina to do three videos in a row.
He's getting too old. We're doing a lot of videos. We're going to be out of town middle of this week, going to Chicago. You're not actually. You're going to be here editing all these videos. But Ben, me, the unit, Sam, the Frostman, and Matt Burton going to Chicago for a conference, Invest for Kids. Follow us on Twitter. We're going to give updates on that. But in the meantime, because we have so many earnings reports coming out, we are talking and previewing earnings and also doing some reaction to some earnings announcements that have already come out. So check it out. Follow us on YouTube. Follow us on Seeking Alpha, whatever it may be, because we're hitting on a lot of companies. Like some stuff that we own, some that we don't. Hitting on everything from Polaris to Boeing to Twitter right now to Amazon and Alphabet later on. So check all those out. They'll all be live. But we're going to jump in right now with Twitter. The big storyline for Twitter for the last 3 to 6 months really has been acquisition. And you saw this stock, we all watched it rally from, low teen or mid-teens, I guess, all the way up to $25, solely on rumors and speculations of acquisitions. Everybody from Google to Apple to LinkedIn to like all these types of things were discussed. And at the end of the day, finally they trickled down. Salesforce, I think, was the last one to actually get passed up. I mean, you just had all this stuff that was rumored and speculated. It ran up to 25 and then just...
It seemed like every day there was a new, just massive name thrown out there, and then the stock would jump 10 to 20%, and then the next morning that company was like, no, that wasn't really true, and so it dropped, 30%, and then the next day it was just a roller coaster.
It was insane, and that's really what's been dominating the headlines for Twitter. All the while, we should have some things that are really positive news-wise for this company, especially as you start to look at things that in theory should matter for a company, things like revenue and earnings and maybe even users, because you've had huge major events. I think they're going to see an uptick from usage, but the challenge is defining how they get that usage uptick. But I think they're going to see an uptick probably because of the Olympics. Really large coverage there, lots of events that were really widely covered both by amateur tweeters as well as major news organizations. Obviously, the political scene has been an uptick every day. It seems like the top trending topics have something to do with the election. Plus, those debates were kind of madness. It's almost like those debates were created for the idiots like myself on Twitter. So you have that. You have the NFL games that are getting broadcasted live on there on Thursday nights. We've watched a couple of those. We actually a couple times have gone to a bar and watched Thursday Night Football on our phones because that's how you know you're a cool guy.
Even though the TV is right up
there.
there.
Yeah. So
we wanted to be in and trade.
Yeah. The kids love it. So that's kind of the things that are going, and so it seems like those things. A lot of positive momentum, event-driven momentum that may not be replicable in 17. So in 2017, when you don't have the Olympics, you don't have the presidential election, you've got these things seemingly setting up for a really, really strong quarter. But even that seems to already be getting overshadowed by recent headlines. Number one, it's come out now that 8% of the job force is going to be laid off at Twitter. That's the early report from Bloomberg News. We don't know that that's confirmed, hadn't been announced, but we believe it to be credible. That's a big chunk. That's concerning for a company who still is having a lot of challenges on the top line. To see them start transitioning into cost cutting can be concerning in an isolated instance, but other people are reading through that and also looking at a recent announcement that they're going to move their conference call up. Normally they report after market. We usually actually watch it and do a live tweet of the Twitter earnings call and the Periscope, which is always kind of a disaster. But they've moved that up to pre-market, so they're going to actually do that Thursday, I think it's 7 a.m. or 7:30 or something like that. So they've moved all of that up, which has made people think buyout. And I don't know how much of that is just market reaction. There's rumors maybe that SoftBank might be interested in acquiring them. But it's just created this news cycle of buyout rumors that Twitter seems perfectly content to continue to push, don't you think?
Yeah.
They're just leaning on that so much because that's the only time they've gotten any positive momentum for their stock price. But what's alarming about this is thus far, they're more than struck out. They're like 0 for 6 or 7 in terms of these buyout rumors actually coming to fruition. And the stock it's a little bit higher than maybe it's low. It's trading around 17, 18 bucks. But it's not shown any kind of sustainable growth. Again, it ran up to 25, fell back just as quickly. And that's really alarming because if there is not a buyout, because the market now is thinking buyout, that's the reason for this change. That's probably the reason for this layoff. They're getting lean and mean so that they're attractive in an acquisition setting. If there is not a buyout announced Thursday morning when they report earnings, I don't think anything else they report will matter.
No.
I think everyone is saying buyout, buyout, buyout. They've been saying that for months. So then it gets a little bit ugly because it doesn't really matter how they actually perform. And if you look at estimates on a GAAP basis, Twitter's expected to lose 15 cents. Non-GAAP, I think the expectation is certainly a little bit more positive. They're expecting non-GAAP earnings of 9 cents, which is kind of in line with what we've been seeing from the company. They're expecting a 6% increase in revenue, up to $600 million, and they're looking for more than 313 million active users. So those are really the numbers: earnings, monthly active users, maybe even more so, and then revenue. You got to see that top line start to grow to even begin to justify cutting costs. Because if you're not getting growth on the top line, and you're just cutting costs, it's going to look like you're just chasing an earnings number.
Yeah. Let me ask you a question. I know you brought up yesterday how everybody cares so much about the monthly active users, and you brought up a good point that you don't have to have a registered account to see tweets or be on. I don't know if you can see a Twitter feed, but you can definitely see tweets or.
Yeah, and that's a change that they rolled out about a year ago, and the analyst community, for right or wrong, I personally think wrong, but I'm a little bit of a Twitter apologist. I hate management, but I really like the platform.
You do like Twitter a lot.
I like the platform a lot. I think the business model can be successful. I think management's atrocious. But I think they've done a poor job. One of the things I think management's done the poorest job of is redefining the key metrics for this company. Monthly active users is basically exactly what it sounds like, users that log in on a monthly basis.
Which has been steadily declining.
Yeah, it's just been basically flatlining, kind of bouncing kind of right around that 315 to 310 million, kind of right in there. No growth, though. That's the big thing. It's no growth. It's a growth company. It's not growing by that metric. My counterpoint, and I think what they've done a really, really poor job of capturing, is simply this. Well, a year ago, we broadened our platform to attract new people, specifically people that don't have to log in. If you rewind a year or 18 months ago, it was pretty hard to see a lot of Twitter content without having an account. Now you can see a ton on twitter.com, the homepage, which is one of the most popular domains visited in the United States. You can see a lot of content on Google. It's included in search results. You can see a lot of stuff. More and more platforms are enabling and making it easier to embed tweets within articles, things like that. So there's a lot of other ways that you can actually see Twitter feeds and Twitter content that weren't previously available. So it kind of seems like that disincentivizes you to actually join. In other words, imagine a country club, golf club, whatever you want to have it. If I don't have to be a member to play golf there or drink beer there or have a sandwich there, I'm probably not going to join.
Right.
I'm just going to show up and do that, especially if it costs me the same amount of time, in Twitter's case, nothing, or the same amount of money, rather, nothing, to go play there. So there's kind of a built-in disincentivization to actually join on Twitter, and I don't think that's been accounted for. I think they need to create a better metric that basically says actual Twitter volume in some way. And the other example of this is, say, our podcast. You could very easily look at our podcast, which we launched, I believe, in early May. You could very easily look at this and say, well, Narwhal Capital Management and Tusk Media have only created one more podcast than they had a year ago. In 12 months' time, they only have one more podcast.
Right.
Or you could actually look at the volume of content we are producing, and you could say, well, over the last 6 months, they've put out 200 and something episodes, or whatever the numbers have. So I think those tell two really, really different stories. So you could kind of look at this different ways. I don't care so much about monthly active users as I do their actual rate of engagement, because that's what advertisers don't say, hey, Twitter, we're going to pay you X amount per you monthly active user. They don't do that. They're paying for impressions and for actual action steps, which is totally driven by how engaged users are. So 313 million highly engaged users is way better to me than 500 million unengaged monthly users.
Yeah.
And they've done a really poor job of capturing that.
We were talking yesterday, we were talking about social media sites that we use consistently and that we like the most, and you and Ben did a podcast that had a chart of it, and Twitter was up there in popularity and favorite. But we were thinking like Facebook now, probably less than 5% of my friends actually make statuses where they type something, and me and Scotty were talking about how it's pretty much like a video sharing site now. Like my news feed is like 100% almost
tasty videos,
pictures and tasty videos,
all of that.
And I was talking about, I don't think that there's someone that's going to come in and take over the way that Twitter, how you can follow anybody or anybody famous and just get their thought immediately. Like, how else would I know what Ken Bone is up to? You know?
Seriously,
I can't add him on Facebook. I assume he wouldn't be my friend.
The Bone effect is probably going to be a bona fide factor for this quarter's performance for Twitter, moving ahead. But yeah, I think you're exactly right in terms of just like what people rely on different platforms for, and that's what's interesting is, if you rewind the rhetoric around Twitter, even in its early days, we're like, this is stupid, you only have 140 characters or whatever it may be. And now it's almost like Twitter is the go-to for written content shared socially, which is probably a huge indictment on modern civilization, that 140 characters is plenty for me to say all I need to say. But really, you look at Facebook, it's mostly videos, Instagram, obviously, mostly photos and videos. You start to look at these other, social networks. I know Scotty's a big Pinterest guy. You're not, but Scotty's a big Pinterest guy, great for recipes and like home decorating and things like that. But
He likes decorating.
Ironically, Twitter, which limits you to 140 characters, has become kind of the the leader in actually getting written content out there, which is just bizarre.
Yeah, and it's quick and it's engaging. I guess you can just scroll through really fast and get what you need from who you want it from, or I guess.
Yeah, and I think that, again, a great product, decent business model. I think management's done a poor job of messaging. I think they're continuing to do that. Again, they may say, hey, we're getting bought out for $30 a share on Thursday morning, in which case I think shareholders of Twitter would be thrilled. We do not, as a company, own any shares of Twitter.
You'd be really upset if they got bought out for
$30. Well, in disclosure, I do personally own some Twitter shares, but the company does not. None of our clients own any Twitter shares at the moment. But again, management making a high stakes game here. If something goes wrong, it's not going to matter, I don't think, at all what the actual numbers say. It's all going to be what's messaged Thursday morning.
Right. Do you think that a buyout is the only long-term ploy for Twitter?
I don't. I think that's the most attractive, and I think that's probably what a lot of people are clamoring for, especially people who've maybe got in on the stock that they thought was dipped when it got to 40 or 30 or even 25, and they rode it all the way down to high 13s or 14. I think a lot of people would jump at that. I think new management is the best possible long-term scenario for Twitter shareholders. I think a new management team could come in and just make subtle changes and shifts. I mean, there's so many things that it seems like would be monetization opportunities. How often do you see a tweet used in a broadcast? They're not. It's all the time. CNN, for instance. Why is CNN not paying for use of Twitter tweets?
Right.
Why are they not doing that? Why is there not a premium platform where if CNN pays Twitter, I get a little cut of that as the person who sent the tweet?
Right.
Why is there not a platform like that to further engage the best content, the wittiest jokes, the best sports commentary, the best music reviews, whatever it may be? Why is there not a program in place to really incentivize everyday people to really create great content and do it on Twitter? I think there's a lot of things that they could do there, just easy things.
I think that's why people are so bearish on it, including me, honestly, because they're beyond that maturity point, like pretty far beyond it, and they haven't done that yet. If it's their first 2 years still, then I get just trying to grow it and not making earnings, it's beyond that point.
And I think they've dropped the ball on a couple fronts. I thought they created a really awesome platform in Vine that they just let die on the Vine pun
Vine
completely intended.
Death.
Maybe we can make a Vine of that. They let Vine die on the Vine. So they did that. They acquired Periscope, which was an acquisition, and was head and shoulders above every other live video broadcasting tool out there. And like that has been surpassed by Facebook Live in terms of usage, in terms of subscribers, in terms of people actually broadcasting. It's unbelievable to me because I still think Periscope is a better platform. We've played around with both here on the podcast.
Yeah,
I still think Periscope's better, but they've just completely been unable to capitalize on that. And I think the biggest thing is you're starting with a much smaller user base for Twitter versus Facebook.
Right.
They were totally unable to attract Periscope-only broadcasters. People that say, oh, I don't really tweet that much, but I'm going to create a Periscope account because I want to do video. They totally dropped the ball on that. And you just look at the overlap. It's very, very easy for me to set a camera on top of our camera and make a video for YouTube, but also have it on Periscope. I think they could have reached out to YouTube stars, people like that, kind of the way Facebook did. Facebook's paying video producers to go on Facebook Live. Twitter did nothing like that, and they never really took off on Periscope. And again, I think it's the better platform. So I think they've kind of dropped the ball on several things, and yeah, I think management's the best option is a turnover in management. I think the more likely option is a buyout, but I'm still not sure we're going to see a buyout right here again. Even at $18, if I'm looking to acquire this company, we've seen it at 14. I'd rather pay a premium on 14 than I would on 18 any day.
Absolutely.
And something tells me management's going to ask for a steeper premium than most people want to pay.
Yeah.
So there you go. Thursday morning, Twitter earnings coming out. Follow us on Twitter at Tusk Media LLC. We're also on Facebook, in fairness, facebook.com/Tusk Media LLC. Hit subscribe on YouTube. Hit subscribe on Seeking Alpha. Follow us. All that good stuff. Lots of earnings reports coming up over the next couple days. Y'all have a good one.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.